Yeah, I couldn't hear you, Prashant. Yeah, sure. Thanks. Yeah, I'm audible, right? Okay. Yeah. Good morning, everybody. Welcome to this webinar, which is organized by Kotak Life Insurance. I hope all of you who are listening to me from different parts of the state, different parts of the country, different parts of the globe are in the best of health and most importantly, in the best of spirits. Very, very warm welcome to all of you once again. This is Rosemary, and I will be your host for today. So today, ladies and gentlemen, we are all here to spend probably 1.5 hours to try and understand how is it that we can live our golden years with dignity? How is it that we can have the best and have that kind of safety and security that people always earn for, right? So on that note, we will divide this presentation more or less into three portions. First, we will try to understand what is the current scenario, at least economic situation around us. Try to look at the various options which were available for us till now, and look at what is the solution that Kotak Life has to offer to each one of you, right? So without any further ado, let us move into the presentation. Right. So, as we discussed, we are going to be understanding, or we're trying to take a look at how is it that we are going to celebrate the so-called golden years of our life. So, all of you listening to me would probably be, hopefully, most of you are in the retired phase. Many of you would be in the pre-retired phase. Maybe another 5, 10 years to retirement, and seriously considering that now. In fact, one of the biggest advantages in these COVID times, when at least till a month back, most of us were in a lockdown in most of the countries across the world. And one thing which I always, appreciate about this lockdown period was that more or less we had a restriction on our movement. We had a restriction on, the food. Like we, could not really go outside, eat outside, probably get food from outside. We were restricted to eating the healthy kind of food that kind of boosted our immunity, food that we generally don't consider as tasty. So we had plenty of restrictions with regards to movement, with regards to, we were taking utmost care of our health, etc. So one thing which I felt is like this is more or less a trailer for each of our retired life. So all those of you who are listening to me who are in your pre-retired era, maybe in your 30s, 40s, etc. Retirement is probably another 10, 15, 20 years away from you. This was a great period for us to analyze how, or look at a trailer for how the retired period is going to be. Even then you have restrictions of movement, restrictions of going outside. You take food that is healthy, you're more or less happy, and for many people there was a fluctuation with regards to income also. So this has given us a very good idea of how our retired life is going to be. And if one thing was very clear to all of us, it was that even under all these restrictions, if we need to have a comfortable method of existing, if we needed a smooth day-to-day operations, one thing which is non-compromisable is the income that keeps coming to you. So let's take a look at all those people who are pre-retired. Let's take a look at what are our options once we reach the retired phase. For all those of you who are already retired and have your adequate methods of taking care of your income planning, let us see what is the solution that we have to offer, which can not only enhance the methods that you already have, but also give you one additional provision, which is safety, stability, and guarantee. Right. So, on that note, before we begin and get into the solution, I think we'll take a quick few minutes to present what Kotak stands as a brand for. Now, in fact, today the brand called Kotak really doesn't need much of an introduction, because today it is one of the most trusted, one of the largest and fastest growing companies in the financial sector. So when we talk about the brand, ladies and gentlemen, definitely we cannot start without introducing or talk about the man whose vision and passion was behind what we are today, the very dynamic Mr. Uday Suresh Kotak. So, ladies and gentlemen, Kotak Group was started as part of his vision in the year 1985, and today this gentleman, who is the non-executive vice chairman, has been the recipient of many awards, including the Lifetime Achievement Award for the year 2019, and most recently for all of us in India, he was very prominently present in the news because he was elected as the president of the CII. Now, this particular group started off, however, as a very simple and humble idea in the year 1985. We, in fact, started as a bill discounting company, in layman's terms, Hundi discounting company. And from there, diversified baby steps, ladies and gentlemen, slow and steady wins the race. So, probably we are the best example for that. We took baby steps into diversifying into different fields of finance. From bill discounting, we moved on to auto finance, from there to investment banking, mutual funds. And it was in the year 2000 that Kotak Life was established in association with a foreign partner called Old Mutual Life Insurance, based out of South Africa. Now, today, if we talk about the Kotak Group, perhaps the first entity that might strike you would be the Kotak Mahindra Bank. Sure. However, it would be interesting to know that the bank was actually formed only close to 15 years post the establishment of the group. So, Kotak Group received Reserve Bank of India license to operate as a bank only in the year 2003. Now, from there, we moved on to many different arenas of finance. And the biggest or one of the most landmark or milestone years was 2015, when many of you would remember that the Kotak Mahindra Group acquired one of the prominent financial players in India at that time, which was ING Vaishya. And in fact, many of you who are listening to me would have been ING Vaishya customers at some point, and you would all realize that no money was lost anywhere by anybody. Only those orange accounts that you had became red accounts of Kotak. So today, if you look at Kotak Group, ladies and gentlemen, this is a fully diversified company. This is a fully diversified organization present in the country. And the only specialization that we carry is handling your money in whichever areas, in whichever divisions, in whichever portfolios that you would like to invest. Handling money is more or less our forte, and that is very well vouched by or validated by the CRISIL rating. Today we are the second largest private sector bank, and one of its only kind which has been rated triple A stable by none other than CRISIL. So not getting too technical, but let us see. Now today, moving on, whenever we talk about banks, people are always having this kind of confusion, chaos, and fear lurking inside, because today what has happened is, along with the word bank, there is another three-letter word which has become kind of attachable to it, which is NPA. Yeah, I know all of you are thinking of the same thing. So most of the times when we think about a bank, now people are like, oh my god, what will be the future of this particular bank tomorrow, whether it's going to be insolvent, whether it's going to be consumed by the NPAs that it have, etc., etc. So this is where we can give assurity or safety or stability to the people who have entrusted their hard-earned money with us. We are the one of the only banks in the country whose NPAs are lesser than 3%. Yes, you heard me right. I said 3%. Right now, this is also, see, this values of financial ethics, or this values of financial prudence rather, is followed across all the divisions of the Kotak Group. And so, if we are to take a look at Kotak Life as an entity, Kotak Life, we are an organization which has been in this insurance industry since the last 20 years. Like we discussed, we started in the year 2000, so it's 20 years. Out of these 20 years, this is in fact our 12th year of being profitable in a row. Now, all of you are wondering what happened to the first 8 years. Well, for any private organization, most of the companies started in the year 2000. We were given 10 years time to break even by the regulator. Okay? All the insurance companies are regulated by an entity called the IRDAI, much similar to the RBI, which regulates all the banks. So the IRDAI had given all the private groups more or less 10 years to break even and start making profits, right? We were the first private life insurance company in India to be profitable. Since then, we have been 12 years profitable in a row. We've covered more than 3 crore lives. We manage an asset of 32,000 crores plus and have a net worth of 3,189 crores. Now, two most important or two differentiating factor as far as our group is concerned is that first and foremost, just like there is a cash reserve ratio in banks, many people have this lingering doubt that after all you're a private life insurance company, tomorrow what happens if the company is not there? What happens to the customer's money? Okay, so here is where the IRDAI has a regular check. Now, since the regulator is there, they are not going to wait for a liquid reserve. Too technical? So let me simplify it. As far as any individual is concerned, say for example, my monthly expenses are around 10,000 rupees. Okay, so if I know that my expenses are 10,000 rupees, for me to be considered financially stable, I should have at least 1.5 times of this. 1.5 times of this is 15,000 rupees. So I should have minimum 15,000 rupees in my savings account, which I should be able to pull out at any moment. So if my expense is 10,000, I should have at least 15,000 rupees. This is the way the IRDA makes sure that every company is at least 1.5 times, secure over the liability that they have. Now, Kotak Life Insurance, ladies and gentlemen, stands really tall here and makes sure that the customer safety is of utmost priority to us. So IRDA expects that we should have at least 1.5 times, but Kotak Life has made sure that we have 3 times of our liability, which is kept aside in terms of liquid reserves, which means against any potential eventuality, we have secured 3 times of that amount, which is available for immediate liquidity. Right? So if this does not give you a confidence, ladies and gentlemen, hold on till we tell you that perhaps the biggest and the brightest feather in our cap is that today we are in the times where we are realizing the need of supporting our Indian companies, Indian industries, etc. We are talking about being local. We are talking about Atmanirbhar, right? So at these points, perhaps the best news that we have for you is that today Kotak Life Insurance is the only private life insurance company to be 100% Indian owned. What do you mean by 100% Indian owned? Almost all the competitors, all the fellow players of ours have an association with a foreign partner. So around 79% of the stake will be theirs, around 29-30% of the stake will be their foreign partners. However, Kotak Group, which was tied up with the foreign partner Old Mutual in the year 2018, we brought back the share that they had, and today, very proudly, we are the only 100% Indian private company to be in the country, to operate in the country. So this should be a great feeling for each one of us to know that we would be associated with a brand which is 100% India, which means the money that you invest would be completely within the country. And most importantly, since we do not have a royalty to pay to a foreign partner, whatever profits this company makes, 100% of that remains with us. There is no royalty, 30%, 29% that we have to pay to anybody. So the entire profit, 100% of the profit that we make stay with us. And since it is mandatory that 90% of this profits should be given back to the customers in terms of a bonus, compared to XYZ company who is also into life insurance business, ladies and gentlemen, 90% or 100% would be a great bigger share or a much bigger amount than 90% of the 70% profit which all our counterparts have. Now, I'm pretty sure these are great news for each and everyone who are listening to me as potential associates of the organization. Then hold on to your breath, because the latest feather in our cap, ladies and gentlemen, is that one of the biggest worries that people would have is that you, as insurance companies, we are promising returns for 5 years, 10 years, 15 years, 20 years. It's always a long-term association. So how do we know that the organization that I'm associated with is financially stable? Tomorrow we hear left, right, and center that companies, financial companies, some of them are closing down, people ran away with money, others are insolvent, some others have closed down, etc. So this complete chaos. So how is it that we can know that, Kotak is here to stay? We've been here for 20 years and we're going to be here for the next 100, 200 years, right? How do we know? Because today we are the only life insurance company, and not just in the private sector, across the country. We are the only insurance company in India which has been rated triple A stable by CRISIL. What is triple A stable? Triple A is the highest level of stability or creditworthiness any organization can achieve. So, ladies and gentlemen, this means that whatever hard earned money you're entrusting with us, we as a company are very well stable, very well settled to make sure that the promise that we have given you will be delivered uncompromised, right? So this financial prudence, this way of working, this ethical governance has actually led to the consistent profit track that we carry. And perhaps this profit track is what converts to what we give back to each one of our customers in terms of a bonus. So the most thrilling news for the day is that we had declared 415 crores as bonus for the year 2021 and 1920, sorry. And this is more than double of what we had declared in the year 2019. And this is purely because today we are a 100% Indian company and we have no royalty that we have to pay to anybody else. Now, as far as I'm personally concerned, all these parameters sounds great, and I have a great impression. However, as a customer, more or less, one of the biggest priorities that people would be concerned about would be regarding the service. What is the service that I can expect? From a life insurance company, I require my money to come to me hassle-free, my money to come to me, on time and as promised. So this is where, ladies and gentlemen, we stand a niche apart with a claim settlement ratio. Now, claim settlement ratio is how many claims the company received versus how many claims the company settled. So, ladies and gentlemen, Kotak Life has the best in class claim settlement ratio of 97.78, which means out of 100 claims the company received, 97.78 of them were settled within 30 working days. Now, around 95% of these claims were settled even before 10 working days. So this, ladies and gentlemen, is the biggest confidence that I can give you. And I know that a few people out here are still wondering what happened to the remaining 3% of the claims. Despite however hard we try, ladies and gentlemen, there will be a slight percentage or slight amount of claims which are raised on fraudulent grounds. Right? Some case of misrepresentation, fraud, breach of contract, etc. Unfortunately, we are in no position to settle those claims, and that is the remaining 2.3% odd, right? So I hope we have been able to convey a well-rounded decision. So you know that at the end of the day, whatever income, whatever money, whatever hard-earned corpus that you're investing with us, there is we stand as a well-rounded specialist when it comes to finance, and that is reflected. We'll take a quick look, quick recap, right? So all of you standing at 60, 65, 70 probably, or even 55 extra, right? Stay right where you are and let's take a look back at what happened in the last 25, 30 years. So if we look at more or less the walk of life, we have the age of, from since birth till the age of 25, butterfly years. We only have to probably learn. It's the learning phase of our life. We learn, we acquire the competencies required to get a job. And we would always wish, say for example, in school, college, and all, I used to always wish, oh my God, hope the day that I get a job comes soon so that I will have money on my own to do whatever it is that I wanted. And perhaps it has been more or less a relentless journey, right? It was so busy that probably you wouldn't have even realized how time flew by, and then you're already looking at a retired phase. Correct. Now, most of the times what happens is, since this time goes by so fast, nobody really appreciates, what all has happened in the last 30, 35 odd years. So we'll just take a quick look and see that in this 30, 35 years, you've actually managed the turmoil. You have climbed the ladders of your career. At the age of 24, 25, you would have joined at probably, an executive level. And by the time you're 60, you would have resigned, you would have retired as managers, general managers, vice presidents, etc. You've taken the highs and lows of a married life. Now, marriage, as you and I, everybody knows, is not such an easy task. It requires time, it requires effort, it requires affection. So we have gone through all that. And this has, given us children. We have been able to shape the world that is around us, and much more beautifully than probably our childhood was. This is, I think, basic parent psychology that, However, our childhood was, we would wish that, when we have children, we are able to give them a much better, much brighter, much more comfortable way of lifestyle. And most importantly, ladies and gentlemen, from there you have seen your children grow. In fact, many people wouldn't have even realized, their children growing in the, hustle and bustle of your career. You would have seen that, in the nick of time, they would have grown up, and your daughter who was playing with dolls one day is suddenly of age to get married. You have made sure that whether it is your daughter or your son, you have taken time to find a great match for not just your daughter, but in terms of family, in terms of comfort level, in terms of status, etc. You have made sure that their new beginning is as comfortable as steps could be. Now, so much has been achieved in the last 30-35 years that sometimes we feel it goes a little unappreciated, right? These are things that everybody is expected to do. So more or less, sometimes it happens that these are all taken for granted. So even though these are all things that every human being more or less is expected to do, these are commendable achievements. And so we'll take one moment here to actually salute each one of you who are standing at this juncture. What you have achieved is probably expected, but it is a commendable job. You have achieved it, right? You have taken care of all these responsibilities of yours in the best possible manner, and we don't doubt it for a second. So we would like to commend you on that. We would like to just ask you to take a moment to relish all those memories, all those achievement of yours. And now let us take a look at what is our way ahead, what lies right ahead of this. Looking at more or less the golden years, and I love this usage. Why the golden years? Do you know why it is called golden years? Many people ask me why it is called golden years. Right. Gold is always used, associated with some auspicious, festival, ceremony, etc. that we have, especially in the Indian culture. So why is it that we call golden years? Because if you see the generally first 25 years of your life, you have lots of dreams, aspirations, you are bubbling with creativity, but you do not have an income of your own. You are dependent on your parents' income, which might not be as bountiful as we expect it to be. Then comes the age of 25 to 60, where you have the income, you are making an income of your own, but you might not really be able to pursue all these dreams, careers, interests that you have because of varied reasons, maybe your responsibilities, your commitments, your engagement with your career, etc., etc. Now, post the age of 60, what happens? Let's take a look. As per the WHO statistics, in the 1970s, the life expectancy was around 69 years. That is another 9 years. Now, with medical advancement, what has happened is from 69, it has increased to 75. And the best news is, ladies and gentlemen, is that since the medical advancements have gone so much, the lifestyle has changed across the globe. We have expected, or the WHO predicts, that the life expectancy will go up by 80-85 years by the year 2025, which is just 5 years down the line. I cannot even say 5 years or 4.5 years. Now you see, from the age of 60, we have a God-given gift of 25 more years. 25 more years. We've been given a repeat of our 0 to 25. Now, one thing which we have plenty is the gift of time. Okay, till 25 to 60, you had an income, but then probably you did not have the time. Now we are given a time of 25 years, which is more or less 70% of your work life time. Now we've been given as a second chance. Okay, we've been given a time to replay this whole thing. Now, if we actually need to make these years golden, so you see the paradox, till 25 we had the time, but we didn't have the income. From 25 to 60 we had the income, but probably we didn't have the time. Now the age of 60 to 85, which is a God-given chance of another 25 years, where we have the time, and along with that, when we have the income, this becomes truly golden. There is nothing that shines better than this. So this is a God-given opportunity where we have the enough ample amount of time to pursue all those interests, all those hobbies, all those passions that we have probably kept aside. There are many of us who are listening to me, probably, who are secret photographers, singers, right, dancers, painters. So all those would have taken a slight backseat because of the commitments, the responsibilities that we had. So now is the time where we have ample and enough time. Now this is the time where people say, okay, you have taken care of your commitments. Now it is time to take care of yourself. Go back to that passion, go back to those talents which we were blessed with, and now it is a time to pursue that. However, if this has to be, golden and truly enjoyed, then we should also have something called an income which is coming. So with time, without income, no real use. With income, without time, again, we will not be able to do it. But this is the phase where we can have a time and at the same time have an income. That is what, ladies and gentlemen, makes it truly golden. So let's take a look at, how as age goes by, not just physical changes happen, a lot of psychological changes, mental changes, maturity, and most importantly your priorities also change. Why do I say priorities also change? Because if we were to look at somebody who was say 25, 26, start okay, at the beginning of your career, probably a car or a home or huge wealth or say gadgets, goodies, etc. These would be your priorities. This would be one of the biggest dreams, getting the new one plus 8, or getting the new BMW X series, getting making a corpus of 1 lakh, 10 lakh, taking that vacation to Bangkok, etc. These could be your priorities, right? But if the same question, if we ask to somebody who is at the retired phase, so out of these four, which one would be a priority? Just like most of you answered, probably none of this is your priority. Maybe you still have that dream of buying that fancy car, or getting that dream home, but this might really not be your priority. At the age of more or less a retired phase, one of the biggest priorities that has come up undoubtedly in the research that we have conducted is that there is only one thing almost all the senior citizens vouched for. They all asked only one thing: this is the time where I just want some peace of mind. I don't want any confusion, any kind of instability. And I'm sure most of you are agreeing with me, those who are listening to me, that this is the time where you do not want disturbances, fluctuations, etc. This is a time where that risk appetite of yours probably has slowly decreased over a period of time. That youthful, adventurous person who was probably ready to jump from the mountain, jump from the plane, and dive into the sea, etc., has maybe reduced a little bit. There would be many of you who are still as enthusiastic, agreed. However, it would have slowly reduced over a period of time. And the best example would be my father. When we were children, I still remember he would be so adventurous as to do mountain climbing, and he would climb vehicles, or drive vehicles on mountains even without four-wheel drive, etc. Now today, the same person, over a period of around 20 years, today it makes him shiver when he sees his grandchild trying to climb the window railings of the window. He suddenly feels like he says he feels it's cold near his feet. So that is what happens to most people over a period of time. This is a time where you want peace of quiet. You want to see that your children are well settled. You want to spend some time with your grandchildren, pursue those interests, and have a comfortable, quiet, peaceful life. So let's take a look at how was the scenario 70 years back. Why is there such a commotion? Why is there such a thought, such a lot of thought, and marketing with regards to retirement planning alone now? Now, all those of you are currently retired, if you remember 60 years back, 70 years back, as far as your grandparents were concerned, their biggest and default retirement plan was perhaps your parents. You would have seen that your parents would have been working somewhere, would be employed somewhere, and that probably that time the salaries used to be, I'm talking about 60 years back, okay, so would be 50 rupees, 60 rupees in a month, 100 rupees in a month. My father says his starting salary was 300 rupees in a month, which was apparently a big amount at that time, right? So your parents by default would have been the retirement planning and option of your grandparents. Now slowly all of you were born, you grew up, you got into more or less government jobs, or private sector organizations, and then came the scenario where slowly uh, over 70 years, if you see, one of the biggest changes also which has happened is 70 years back, people had 10 children, 11 children, extra. That slowly came down to 5, 4, 3, 2, now 1, and going to -1 anyways. So as this slow change has happened, people started moving. They started entering more and more private jobs, public sector jobs, wherein we had provisions like provident fund, we had provisions like gratuity, etc. So slowly this retirement planning changed from just expecting your son or daughter to take care of you. it slowly changed to other instruments. So from 70 years, if you come down to another, 50 years, when people who are retired now probably were in their career, were in their 40s, 50s. One of the most common relied source for retirement fund was your deposits, right? When you retire from a public sector organization or a private sector organization, you would have a provident fund which you have accumulated, you would have gratuity, you would have other, loyalty additions which your company would give you. That amount, 20 years back now, you had FD interest rate of 14, 15, 16%. So you just leave that in a fixed deposit. That amount which you would get as an interest would, take care of any basic requirements that you had. In fact, it was a very comfortable way of doing it because there is no fluctuation, more or less things are safe. There was no scenario of turmoils like today banks are facing. Now slowly what happened is, from 50 years, if you fast forward another 10 years, another 15 years, you would see that one change which happened was this deposit rate which you was getting, no, this 12%, 14%, that is never constant. That started decreasing slowly over a period of time. So the corpus that you have is the same. However, the yield that it is giving you kept reducing year after year. So then what happened is people try to look at other sources of income. And one of the most popular source from 30 years back to even now, perhaps, is the rental income. This is, a tried and tested method. And most of you even listening to me would definitely vouch by something like this. Now, what happened was, from there, slowly in recent times, we have been introduced to, much more modern facilities like through mutual funds. We have, provisions like systematic withdrawal plans, etc., etc. And that is the latest trend. Now, what we're going to do is just take a quick look that all these are our definite methods which we have been pursuing. Most of you listening to me would, be having a combination of these different options that we just discussed. So what we're going to do is take a quick look at what could be few potential challenges which people have faced. These are all tried and tested methods which people completely vouch by, which, you have been enjoying since the last 15, 20 years. But slowly in these 10 years, we have realized that they also come with a little bit of challenges. And especially in this COVID times, we have understood, how prominent these challenges can be and what huge an impact it can have on your day-to-day requirements. So we'll just take a quick look at understanding what could be the potential challenges. So if you look at a deposit income, one of the biggest challenges is that the rate. So today you have a corpus of say 1 crore. The rate that you're fixing it is guaranteed only for a specific period, say 5 years or maximum 10 years. Okay, so somebody who's retired at the age of 60, if whatever the corpus, when they keep a deposit, maximum they will be able to enjoy at that rate till their age of 70. Now at the age of 70, what happens is their monthly expenses, their requirements, because of medical reasons, because of other expenses, their requirement will be higher than when they were 60, but the deposit rate would be lower than when they had taken the deposit at the age of 60. So this is one challenge which could happen. Okay, that is, the rates are not constant. The rates will keep varying over a period of time. Now, the second biggest risk that we talk about is reinvestment. This is exactly what we discussed. Now, as we all know, since FD gives you an option of liquidity, that you will be able to break your deposit at any point of time. As parents, it always happens that this is actually whatever corpus that we had, whatever corpus that we got, that is taking care of our month-on-month expenses without depending on our children. However, say tomorrow they have some requirement, their business did not go well, or your daughter's new startup, the boutique that she started did not go well. We have the tendency and temptation, when we see our children in trouble, we forget everything. All logic defies us, right? So what happens is we have this tendency to break it, and even if we have to compromise on our month-on-month expenses, even if we have to compromise on our comfort, we will go ahead and do that. So that is another challenge which people have faced. It's not a challenge immediately, because at that time, as parents, we always think emotionally rather than logically. But at a later point of time only, we will start facing the logical or rational implications of that. Now, as you can see, the trend of deposit is that it keeps decreasing over a period of time. For most of you who would have probably retired in the year 2010, 10 years back, you would have remembered that you would have got an FD interest rate of around 9%, etc. Today, the same corpus would fetch you around 5.5. Correct. Now, in future also, we cannot expect that the deposit rates are going to keep increasing. From 5.5, it is going to decrease only. Why? Because it is nobody doing intentionally to erode your corpus or something like that. For any developing nation, as a country grows, it is by and large the trend that as the country develops, as the economy develops, the deposit rate will keep reducing. So India as a country, we expect, we hope, we wish that this country, moves from the developing country stage to a developed country. So as this process is happening, we need to anticipate that this is what is going to happen. There is no need to panic regarding this. The only thing that we need to do is accept first and foremost that this is what is going to happen, and to find an alternative. Tomorrow the FD interest rates might reduce. No problem. It shouldn't affect our day-to-day requirements. It shouldn't affect our month-on-month expenses. So depending solely or depending only on something like this could be a challenge in future, because the trend in which this deposit rate reduces is not going to change. We cannot expect that it is going to. It's a very clear trend if you look at the years and the rates, how they have come down, right? So purely depending on this is not going to be a wise idea. So the suggestion as a financial consultant is that a deposit's actual purpose or basic purpose is to give you liquidity. It is not meant as an investment tool. Okay? It is not meant to grow your money. Its purpose is to give you liquidity. So maintain only that amount. Okay, and we would say that amount is roughly around 10 months of your minimum expense. Whatever is your minimum expense, 10 months of that you maintain as immediate liquid fund. In case of an emergency, you can break that and take it. Right? So whatever you require for immediate liquidity, park that amount in a deposit. Please invest the remaining. Now, the next tried and trusted method, and one of the best and one of the highest yielding till some time, right? Which is rental income. And many of you listening to me, especially I'm talking to you right now from Bangalore. So Bangalore, like Mumbai and like Calcutta, etc., happens to be a huge real estate hub. And one of the biggest modes of income here is through rent receipts, right? So one of the challenges that we have seen, especially in these COVID times, is receipt of rent. We cannot expect that the rents are going to come on time. Right? We have no mechanism to ensure that exactly first of a month the rent is going to come. Some way, reason or the others, there are people who don't pay rent for months together. So this is one challenge which we have seen. The second is selection of the right occupant, and this is another headache that we have. Okay, there are lots of requirements that we would have, and our experience with different tenants would have made us realize that okay, this is not a tenant I want. For example, in Bangalore. My brother, who recently finished his engineering and was placed in one of the companies in Bangalore, when he moved here and tried to find a place to stay, it took him such a long time because most of the people are not ready to give their homes to bachelors, right? So others, those who are giving the provisions that they have are too less. Okay, or else the people who have all the required, the minimum basic required amenities, the rent is exorbitant. So there are so many different challenges that finding that right occupant. Maybe your same person with the same food habits, person from the same more or less sector, caste. So many things comes into picture. However diversified and secular we say we are, all these things comes into picture at the end of the day. Now, another thing is, if we manage to find an occupant, so finally, after considering all requirements, we have managed to find an occupant, right? Another challenge that can happen is we really do not know that they're going to stay there continuously and provide us a rent, right? So say, for example, after like 3 months, our tenant, okay, right, in the house that we stay, the upstairs has been vacant since the last 2.5 months. Or now our house owner finally managed to find a tenant, right, for that particular home. That person stayed for around 45 days and then vacated the place. So you see, again, 2 months, and this was actually this person's only source of income. The rent from these 2 apartments are the only source of this gentleman's income. So he did not have an income from their apartment for 2 months. Post that, he found somebody after 45 days he has left. So now again that apartment upstairs is vacate. So this is another issue or another challenge that people have seen. Litigation expenses, there's no need to even get it started. That is one of the most common traits, especially in Bangalore and most places around. We have this land mafia that we are all aware of. Right now, at the age of 60, 65, another headache that we commonly face or people commonly face is the maintenance. Okay, tenants calling you, telling the pipe is not working, that is not working, something else is not working. These are all causes where which does not really give you that kind of peace of mind. It tampers with it. At the age of 60, 65, you're thinking, you're wishing that you have a more or less settled life, a calm life, quiet life, peaceful life. Your children, so I give you a very good example. Your children have come down during COVID times. They're all working from home, so you thought, why not they spend some time with you? You are retired, they're spending some time with you. Now the income till now, pre-retirement, when your children come, you take care of all their expenses, you buy some gifts. You know that when your daughter goes back with her family, you will buy some gifts for her, correct? Make sure that you buy something, your whatever food they like, especially you will buy for your grandchildren chocolates, whatever possible from your end you will do. Now you're in a state where you had some provisions, amenities set up. You had your children coming in, and your apartment, which was probably your only source of income, has not been paying you since the last 3 months. Okay, another two people are saying that because of the pandemic they have lost their job, they are not in a position to pay you the rent. Another two people have left the homes and they have gone to their hometown because now it is a work from home facility. Especially the IT industry and all has clearly told that till December there is no coming back to office. So they have, why should they pay such a huge rent and stay here? It's better whether it is 6 months or 8 months. Now, since the pandemic has started, from April to December is a long period of time, right? It's around 8 months. So it is best that they go back to their hometown where they don't have to pay such kind of a rent. Now, this is your situation. Now, as a parent, you would never explain to your children that this is how it is. It creates worry. You feel bad internally that you're not really able to do anything about it, etc., etc. So that is what happens when we only rely on this method. This is one of the best methods that we have been following since years together. It is a high yielding mechanism. However, if we only rely on something like a rental income, it could pose many different challenges, and most importantly, it could tamper with that peace of mind that you so badly want. Then there's no need to talk about the latest latest player into the race, mutual funds. By name itself, you would recollect that disclaimer: they are subjected to market risk. So this is something which is definitely against peace of mind. You would have to continuously be on a market watch. So unless those, unless all of you are people who are so comfortable, very comfortable with equity, have been very utilized, our suggestion sincerely is that do not rely on your basic expenses for something like this. There are lots of people who invested in systematic withdrawal plans, etc. In March, whatever corpus was around 60, 68 lakhs have come down to 34 lakhs by April, right? So tomorrow there could be a virus traveling halfway across the world, which you cannot even see. There could be a talk of a US-China war. The price of petrol could go down. The price of gold could go up. There will be a bombing in Syria, Libya, etc. All this shouldn't be affecting your hard-earned money and, most importantly, your peace of mind, right? So unless and until you are a person who is very comfortable with equity, and even if you are, the advice is that whatever minimum you require, whatever minimum expenses you require for your month on month comfort, do not bet that on any of this. So we looked at three different avenues which are commonly practiced, which are commonly followed, which are all great avenues. They have their own strengths, right? Now, what we are offering is, whenever it comes to investments, follow Warren Buffett's basic rule of investment. Don't put all your eggs in one basket. Now, why I'm telling you this is because in this COVID times, we have seen that all these three portfolios that we just talked about, all three of them took a hit. First and foremost, the FD interest rates came down 3 times from April to now, September. Correct? It was somewhere around 7%. From 7, it was revised first, second, third. Now it is around 5.5%. The real estate market has completely, gone down very badly. We have not seen such, a dip ever before. Third, mutual fund industry. So there's no need to even mention. So what has happened is all these three have taken a Okay. So what do we do? How do we solve this? Tomorrow we do not know if something like this, if a scenario like this will keep repeating. This is at least a physical hazard. Tomorrow we might have some other kind of a pandemic situation, some other kind of a crisis situation. At that time, however, we realize that our income basic requirements have to still be taken care of. So what is it that we do? So here is where we have another option which you need to add to your portfolio called annuities, right? So what is the option that we have to offer to you? The option that we have to give each one of you is something called annuities. What is an annuity? Very simple. An annuity is a product wherein you will make a lump sum investment. Okay, you're going to make a lump sum investment, and this annuity product is going to give you a fixed sum of money monthly or quarterly or annually. This is going to come guaranteed to you till your lifetime. So clear, what is an annuity? An annuity is you invest a lump sum only, it's a one-time investment. Many people say tomorrow, next year, I don't know if I will have, third year, I don't know if I will have. So annuity is a lump sum investment, one-time investment, which will make sure that come what may, it is not subjected to market risk. It does not depend on the real estate market. It does not fluctuate based on the repo rate changes. It is not affected by anything. It is 100% written, printed, stamped as guaranteed. This is going to give you a guaranteed income every month, every year, every quarter, however you choose, till as long as you are alive. Sounds good? So let me introduce the Kotak Lifetime Income Plan to you. What is this plan which is, giving you a guarantee, written, printed guarantee that as long as you are there, you're going to receive this amount, come what may. This is not dependent on, does not face any market risk, not dependent on any fluctuations in the real estate market, gold prices going up and down. There is a chance of a war, no problem, completely unaffected, 100% guaranteed. So let's take a look at what are the features of this particular plan. Who is eligible? What is the age requirement to enter into this plan? Since this is an annuity product, as far as Indian citizens are concerned, 45 is the minimum age. And the good news, maximum age of 99, up to 99 years. So even if you're 90 years and thinking, madam, can I take this plan? Yes. Right? Many people say, oh, life insurance policies and all, I can only take up to the age of 60. Correct. This is a life insurance company providing you an annuity solution. So anybody who is above the age of 45, up to the age of 99 can avail the benefits of this particular plan. Now, there is a special provision where we transfer funds from UK to India in a pension product. It's called QROPS. For QROPS customer, the minimum age is 55 years. All right. What is the biggest benefit here? Higher the premium that you're investing, higher the amount that you're investing, higher will be the return that you get. This is a one-time payment, like we said. You can take the payments in 4 modes. You can take it monthly, you can take it quarterly, semi-annually, or annually, just like your FD interest, right? You can take it in all 4 modes. You can take this also in all 4 modes. Now, most importantly, what is the tax implication of something like this? Since the government is encouraging people to take care of their retirement, they have schemes like NPS, etc. The government has also made sure that there is tax exemptions or tax benefits for an annuity plan. Whatever premium is being invested in an annuity product qualifies for tax rebate under section 80 triple C. So all of us are used to the section 80C up to 1.5 lakh. Same section, this is just a subsection of that, 80 triple C. So whatever amount you invest here up to 1.5 lakhs, you can take tax exemption under the old tax regime. Now the best part is this tax exemption can be taken not just by resident Indians, but by non-resident Indians also. So all those of you who are listening to me who are residing outside India, you have supported our country, you have supported your family in other country all these years. There is no difference as such as far as annuity plans are concerned. Even you can avail the same tax benefits. Now, with regards to the annuity payout, which is being given. So whatever guaranteed payout that you're receiving, just like how your FD interest, dividends, rental income, etc., same like that, all the payouts that you receive, the total payout that you receive will be considered for as your taxable income for that particular year. So just like say you, for example, you have an FD interest of 2 lakh rupees per year. That 2 lakh is considered as your income for that particular year, and you are accordingly taxed. Same like that. You have a rental income of 6 lakh rupees per year. 6 lakhs is considered as income for that particular year, and you are in the appropriate slab. So same like that, whatever amount you receive, there is no TDS deduction on an annuity product. That is the biggest advantage. Okay, in an FD, they will reduce the TDS and then pay, then you have to file your return, etc. There is nothing like that here. Whatever income you receive will be added at the end of the year. It will be counted as an income, just like your dividends, mutual funds, etc. The difference being no TDS deducted. We are not going to deduct any TDS. At the end of the year, this will show under the header of other incomes, and you can claim. Now, up to 3 lakhs, all of you know, up to 2.5 lakhs in the new or even in the old, up to 2.5 lakhs, that is 20,000 rupees per month, there is no tax. So you will be paying zero tax, whether it is annuity or income or whatever it is, right? So this is the tax implication. In certain funds like superannuation, okay, wherein you are building a corpus till the age of 60, after that you want to put it in an immediate annuity plan, you have the provision to withdraw 1/3 of that corpus. Whatever you invest in NPS, whatever is part of your superannuation fund, etc., you can withdraw 1/3 of that. The remaining has to be invested in some pension product. That 1/3 portion which you withdraw is 100% tax free. There is no tax which is deducted on that. So clear? Let's go ahead and find out what are the provisions that are available. So let's quickly see how this cashback option works. Let's take Mr. Agarwal, who has a corpus of 1 crore which he is going to invest in an annuity product. Okay, so he is taking the lifetime income option with cashback. He is investing 1 crore. Now, how is it going to work? The Mr. Agarwal has invested 1 crore. From the next month onwards, now Mr. Agarwal says that, see, Rosemary, I don't want this income coming annually and all. I miss, my salary which used to come every month on month. So let me take the payout monthly. Fair, no problem, Mr. Agarwal. You invest 1 crore with us today. From the next month onwards, you would be receiving a guaranteed amount of 48,083 rupees month on month. Till when? Not for 5 years, 10 years, or 15 years. Till as long as Mr. Agarwal is alive. So till this last breath, he is sure. He has no confusion whether this income is going to come or not. Come what may, things might change, technology might change, the world itself might change, but this payout is going to come. Now, the question most of you are thinking, what happens after Mr. Agarwal is no more? Post his demise, this purchase price of 1 crore is given back to Mr. Agarwal's legal heirs, which is his spouse, his children, whoever survives him. So clear? Mr. Agarwal invests 1 crore rupees. He gets a guaranteed amount of 48,000 per month as long as he is alive. Post his demise, this 1 crore that he has invested is given back to the nominees. Sounds great? So here now you know that he might have an additional rental income. He might have some amount coming in FD interest rate. Tomorrow, whether the interest rate drops, tomorrow, whether the rental income might come, some tenants might not give rent or they are giving lesser rent, whatever happens, 48,083 rupees is going to come to him. And so he knows that there is no problem. Tomorrow his children has come, his grandchildren has come to stay with him for 20, 30 days. He is the happiest man on earth because today he has the time which he couldn't spend with his children. He probably didn't see his children growing up, but today he has the time to spend with his grandchildren, spoil them, teach them the stories, values that he wanted to, teach his children. And at the same time, make sure that, he has enough money to spoil them also. Okay. So this is the option called lifetime income with cashback. So just most of you are wondering now, madam, if I invest, how much will I get, etc., etc. I cannot, for each individual age, as the age goes up, the annuity rate goes up. As the premium goes up, the annuity rate goes up. So the best thing that I would tell you here is get in touch with the person who has invested you for this webinar, invited you for this webinar, and they will give you the correct details, the exact figure based on your age and the amount. Just to give you an idea, this is the corpus, say for example, if Mr. Agarwal is looking at getting a guaranteed payout of 50,000 rupees per month, then the corpus would somewhere be around 1 crore 3,98,000 rupees. If Mr. Agarwal is looking for 15,000 rupees per month, madam, my minimum expenses come to 15,000 rupees. My medicines, etc., few bills, groceries, etc. I have some other amount coming in rent in terms of FD interest. So let 15,000 make sure that even if those don't come, I should have minimum this amount to cover my expenses. Then the corpus that for a 60-year-old person, it would be around 30 lakh rupees. So if he invests 30 lakh rupees today, when he invests in an annuity plan, tomorrow come what my guaranteed 15,000 rupees is going to come to him month on month. Fair? Interested? So pull out your phones and find out, talk to those person immediately, drop a message and say, this is my age, this is the amount that I want per month, tell me how much is the corpus that I have to invest. Now, very interesting statistics coming up, and for all those of you who are thinking, so what about my wife? Because you remember a few years back, or maybe 20 years back, 30 years back, when you started this life, halfway across you were alone, but from the other half you had somebody else whom you promised to take care of, till death do us part, right? Now, interestingly, WHO says that females outlive males across the globe. So irrespective of any country, women are found to live 6 to 8 years more than men, which means in all probability your spouse, considering you both are of the same age also, your spouse is expected to live around 6 to 8 years further. Now in India, what happens is always when most of the times when marriages happen, except for Sachin Tendulkar and all, right, the spouse or the girl, the bride would at least be 2 to 3 years younger. So you imagine 6 years plus another 3 years is another 10 years, right? So we also, what do? Post you, till you were there, you have this guaranteed income coming, you have taken care of all the requirements. What happens? You are survived by your spouse. What will you do? You will let your spouse, you will think that your children will take care of her, etc. Okay. So for all those of you who want a little more, responsible solution, can I do something for her, madam? Can I leave something for my spouse? And for all those women also who are thinking, can I do something for my husband? There is no gender bias, it's just spouse. So we have a brilliant option with us where you are receiving the post you can pass on this annuity amount will continue guaranteed for your spouse till his or her demise. Sounds great. So how does this work? Mr. Agarwal, Mrs. Agarwal, two very happy couple, two very loving couple who had, promised to take this journey ahead. Mr. Agarwal has invested 1 crore rupees. He would be receiving a guaranteed amount of 47,809 till when? Till Mr. Agarwal's demise. Post him, Mrs. Agarwal would continue to get this 47,809 rupees till as long as she is alive. Post her, this corpus that is generated would be given back in the form of the biggest blessings that the children can receive. This, ladies and gentlemen, tell me if you have any better provision than this to make sure that not just me, as long as I am there, I have this minimum income which is coming to me. Post me also, I have made sure that my spouse's minimum requirements, medicine requirements, bill requirements, etc., can be taken care of. Right? See, we cannot make sure that physically also they're taken care of, mentally they're taken care of. All those are important, but those are really not in our control. One factor which is in our control is make sure that their financial needs are taken care of. So that is something I can do. This is that additional token of love and respect and companionship that I have for my particular spouse. So this is the option called last survivor income with 100% of the annuity continuing for your surviving spouse. Now, many of you would be thinking, and I usually get these questions in every webinar saying, Madam, what if the spouse, passes away before Mr. Agarwal? In that case, as long as Mr. Agarwal is there, he would receive the annuity. Post him, if the spouse is no more, then this money would be officially going back to the legal heirs. As simple as that, right? So as long as Mrs. Agarwal lives, she will receive it. Post her, this money will go. If she is no more before, then the money will immediately go back to the children. So these are the two exclusive options that we have. Apart from this, we have 4 other options based on different customer requirements. Say, for example, there are many people who are, bachelors or spinsters who say that I have plenty of money. I retired as, professor from this place, that place. I have no legal heirs to pass on this money to. But I need to make sure that I have a guaranteed income month on month to take care of me. In that scenario, we can give them an option. They do not want this corpus to go on to anybody else. They don't have anybody to pass it on to. So in that case, we have a provision where, the company will keep the funds, but instead give them a much higher rate of return. We have other scenarios where customer asks us, Madam, I have a child with special needs. Okay, I have a differently able child. I need to make sure that tomorrow, if I'm not there, their requirements are, at least financial requirements are taken care of. Okay, some people say, there are instances where there are grandparents who are looking after grandchildren. Maybe the parents are no more. Now the grandparents say, as long as I am alive, their needs can be taken care of. Post me, their children, how do I know that this money is going to reach them? In such scenarios, we have an option called lifetime income with term guarantee, wherein we will guarantee that, see, when we take about life, we don't know how many years more the life will be there. But when we give a term guarantee, we know that come what may, for the next 15 years, for the next 20 years, this money is going to come guaranteed. So in that 15 or 20 years, even if the grandparent is no more, even if the person who's taking this is no more, this annuity amount, this guaranteed amount will continue to the nominee whom you give under the particular policy. So if the nominee is your child, if the nominee is your grandchild, then this money will come guaranteed to them month on month till the end of that particular term. So as long as you are alive, you will be receiving it. Even if you are not, as far as that fixed term is concerned, this payout would continue. So ladies and gentlemen, the options are plenty with us. These two I am presenting to you because these are the two most commonly asked options. Apart from that, we have many different solutions which we can give you based on your requirement. So this is actually a customized solution which we can do as per your requirement. This is not a product that can fit one size fits all. So the best way to find out, to understand more about this, is take a free consultation. This is not going to cost you anything, ladies and gentlemen. Kotak Life is not going to charge you for any of this. This is a free consultation. All those people who have been kind enough to invite you for this particular webinar, thank them for the opportunity and tell them that this is what your requirement is. How can they help you, right? So this is the peace of mind that we offer. In the beginning, we told you that this is, the peace of mind that we have to offer. So how is this annuity different from, the commonly known methods or modes that we are used to? Because this has one word attached to it, ladies and gentlemen, called a guarantee. Come what may. If your deposit interest continues at the same rate, your rental income is coming in, what do you say, unfluctuated, your mutual funds are doing good, great. But even if they don't, you should have a minimum amount which is coming guaranteed to you come what may. Whatever happens, this amount is coming to you. Your minimum expenses. What are the minimum expenses? Medical expenses, etc., that you have in your family. Those are non-compromisable. No. Tomorrow they are not going to listen to you that your rental income didn't come, your fixed deposit didn't come, interest rate got reduced. It does not affect any of these. Few expenses which are non-negotiable in our life, every month on month expenses, right? Those make sure that since those expenses are definite, since those expenses are non-negotiable, you should have a provision which is giving you a guaranteed income to cover that. That shouldn't be, there shouldn't be a question mark when it comes to taking care of your basic needs. You have toiled, struggled for the last 30, 35 years and made sure that you have reached what level you are in right now. You deserve to have a dignified, you deserve to have a celebration of the next 20, 25, 30 till 100, I wish, years. We have spent enough, number of years in chaos, in confusion. What is going to happen? Will this happen? Will that happen? Etc. 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 Now is the time for us to relax. Our concern and our, worry shouldn't be with regards to money. We can enjoy this comfort. We can enjoy this level only when something like your basic income is guaranteed. So, like I said, if this period has to be gentlemen, then one thing which is non-compromisable is making sure that along with the time that God has given us, we should also have the money to support us. Now, last but not the least, let me just introduce a quick provision called Married Women Properties Act, okay, which you can attach to an annuity product. The biggest advantage of it being that the proceeds, whatever annuity amount you receive, if it is taken under the Married Women Property Act, it becomes 100% non-attachable, which means that annuity amount cannot be attached against any liability that might come up in future. And the best part is there is no additional fee required for this. It is just an additional paper called Section 6, which you have to sign and nominate your beneficiary or enact a trustee. So these are the provisions which are available along with this particular scenario. So like I said, remember, there is only one reason for this. We give you something called guarantee, and that is 100% guarantee. There is no question of whether this is going to come or not. You know for sure that whatever happens, this amount is going to come. So this is a point where I will take a break to drink a glass of water, and you all can quickly type in your queries, your questions, and post it. I have already received few queries which I will answer. So all the others, if you have any other query which was not answered in the session, please post it right now. Right. Okay. Okay, so we have a question by Surya Ramanathan sir from Bangalore. Hello sir, good afternoon to you. So his question is, what is the minimum fixed amount to be deposited? Okay, now I would tell you sir that the minimum amount to be deposited is completely based on what is your minimum fixed expenses for the month. So remember this. To all those of you who are listening to me, all those of you who are wondering what is the minimum amount, remember what is the minimum fixed expenses in your month. Okay, so in your month, you know you're the best person who handles your finances. Find out what are the minimum fixed expenses. Fixed expenses, what are the expenses? Medicine. Every month on month, this is the cost that we spend on medicine. Bills, electricity bill, TV bill, nowadays data bill, Wi-Fi bill, etc. will come up to this much. Apart from that, if you have, groceries, other, what is the fixed cost? Every family will have more or less an approximate amount. 5,000 rupees, 7,000 rupees, 10,000 rupees, 20,000 rupees, which are fixed expenses for that month. Find out what is the fixed expenses for your month. Multiply that by 12. Okay. Find out what is the corpus required for that. That is your minimum investment in an annuity product. But aside, the minimum investment in an annuity product is 5 lakhs. Okay. Waiting for questions. Right, ladies and gentlemen, I do not have many questions. So if you have any queries, please post it in the group. Okay, so I have a question, sir. I cannot see from the name or which place. I'm so sorry about that. The question is, I am getting 6% on my deposits. Why should I invest in an annuity? I think we answered this question, dear sir or madam. However, let me tell you that, say for example, in 2010, okay, in 2010, whoever has purchased, says we have Mr. X who has retired in the year 2010. Okay, now Mr. X had a corpus of 1 crore. Okay, now that 1 crore he could have two options. That time the FD interest rate was around 9%, right? Comparatively, the annuity rate was around 7.85. Okay. Now that time, Mr. X would have thought the same thing. Oh, I'm getting 9% on my FD interest rate. Why am I investing with annuity? 7.85 is too less. So he had invested for 9 lakhs per annum, which is 75,000 rupees in a month. Correct? However, if he would have taken an annuity at that time, he would have got 7.85 lakhs in the year. Correct? Now 10 years you fast forward. After 10 years, from 2010, now when it's 2020, his FD he will have to reinvest. Correct. Now for the same 1 crore, he used to get 9 lakhs for the last 10 years. The same 1 crore will fetch him 5.5% today, which means 5.5 lakhs in a year. However, that annuity which he had taken 10 years back will still continue to give him 7 lakh 85,000 for not just this 10 years, for the next 10 years, and even, as long as this person is alive. So that is the difference, ladies and gentlemen. This term, you are getting 9% now, you are getting 6% now. Perfect. Correct, sir. But you will get that only till the tenure is over. After that, whatever is the new rate is going to be applicable. Now, why is it that, we say that you have to hurry to purchase at the current rates? Is because as the rates generally goes down, the annuity rates will also go down. So today, if you book at this particular rate, then this will continue for your lifetime, because once you book an annuity, this rate is fixed for lifetime. However, today, if you delay, tomorrow as the deposit rates goes down, the annuity rates will also be revised. So if you wait for purchasing it at a later point of time, only the new rate is going to be applicable to you. So this Mr. X who, probably would have enjoyed that 9 lakhs for 10 years. Most of you are thinking that, oh, he would have, got that much in that 10 years. Sure. But from 60, he would live at least till 80. No? So in the next few years, if you still calculate, what is the difference between 5.5 lakhs and 7.85? Right? So there is no question of whether it is good or not. It is good, but don't make that the only source of your income. That is when it becomes a trouble. Make sure that as far as your fixed expenses are concerned, you have an annuity product without fail. Right? So questions, any more questions? Okay. Okay, so we have a question from Chennai which says, Madam, in these times, people are reluctant to pay premium for many years together. Huh. That is the reason why, sir, we have a lifetime income plan. You only need to pay the premium for one time. It is a single invest policy. You don't have to pay premium for years to come. So even if it is somebody who is, say, for example, at the age of 60. Recently, we had a scenario where, um, a gentleman who is about to retire in the next 2 months, they have the superannuation fund. Some of the superannuation funds are linked to market. So what they've done is we have this provision where directly from there we can transfer from the company itself. You can transfer to any superannuation fund, NPS, etc. You have to purchase annuity from some company or the other. So that you can directly write a check to Kotak Life Insurance and you can purchase it. It's a one-time investment. There is no question of tomorrow if I don't have an income. No worry. Today, what corpus you have, make sure that you're investing in so that that guaranteed rate will continue for the years to come. I don't have any more questions. So I hope the session was a value addition to all of you in terms of the provisions. All those who are listening to me who joined us for the webinar, thank you so much for your time. Make sure that you're purchasing your peace of mind today. Whatever is your fixed expenses, all those who are listening to me, this is one thing which we all require. We all crave for this kind of stability in life, correct? Always uncertainties and challenges and troubles. After all these, you've spent enough, you've spent a fair share of your life going through challenges and troubles and tribulations and all that. And in fact, this is the time where you should have that peace of mind. When you think that, okay, now I'm 65, I have another 20 years to live, you should think that with joy. My God, I have another 20 years to do whatever I want. Right? It shouldn't be that, my God, this is not coming, that is not coming. This person is calling for, a reduction in the rent. Another person is calling saying his pipe is not there. Another, my bank manager says he cannot do anything. My FD is maturing. I have to reinvest that. I just wish all this was over. No, this is the time where you look at the 20 years and say, thank you, Lord. This is the time where you have given me the time and you have given me the income to take care of all those requirements, all those dreams and aspirations that I had. So this is a beautiful experience that, this particular golden years, it should be truly golden. It should be diamond, actually. It should be diamond. So don't settle for gold. So tomorrow, whether the repo rate changes, whether the stock market goes up or down, whether the premium, and when I say revise, they're going to decrease the rate only. They're not going to increase it, right? Whether or not today, whatever rates are available, they are very decent and they're actually higher than the deposit rates. So make sure that you are buying your peace of mind today. We at Kotak Life, managers, staff, partners, advisors, we are fully geared up. We are waiting for your call, your information. So please pick up your phone. Tell them that this is my fixed cost. I want to make sure that this is taken care of. This shouldn't be my headache. My fixed cost is 20,000 rupees for a month. Tell me how much I should invest to make sure that this is coming month on month. Buy your peace of mind today. A big thank you to all of you who spend this valuable time of yours with us. Hope all of you remain safe, secure, most importantly, happy. because it can be very difficult when we are, forcibly constrained and, a lot of negativity outside. If you switch on the news, you will be, it's equivalent to ruining your mental peace, right? So in these times when, times outside are tough, times outside are, more or less challenging, let us make sure that when it comes to your income, at least there is no chaos, there is no confusion, because that is in your control. If you decide today, you can purchase that peace of mind, that happiness, that stability for your life. Why you should do it? Because you deserve it, right? So thank you so much to each one of you. Until we catch up next time, tata, bye bye, see you.